Yeah, that's astonishing, eh, Johnny? So how we doing? You got sound? Please give me a thumbs up. In the morning. Hang on. Set it up. I think I did that. There we go. That's better. Yeah. Hey, good morning. It's 8 o'clock and some change, 8:15 in the morning. Welcome to Forex.Today, the YouTube community of more than 19,000 foreign exchange traders. So if you're here for technical analysis, fundamental analysis, trader psychology, macroeconomics, monetary policy, central banking, yada, 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 you is in the right place. Ask questions, get involved, treat each other with dignity and respect. If you got negativity, check it at the door. If you're here to spam us, dude, we're not interested. Go somewhere else. Go somewhere else. Cool. So we have a new week to set up. Today is Mutual Fund Monday, which is very important. New money coming into the market. Yeah, baby. We're also at some key technical levels. Yeah. Maybe the beginning of something beautiful. Could be a rabbit, could be. So anyway, so we'll go through the charts today, and we'll also go through the calendar today. So make sure you're paying attention. Make sure you take notes. By the way, my name is Wayne McDonald. I'm a currency trader. Been doing this for almost 20 years. I have a background in economics. Also a background in finance. Some crypto, yeah, alternative investing, venture capital. Hey, what can I say? I like money and I like capitalism. Cool. So we'll cover all that today. We'll use all that somehow. That's our leverage here. Knowledge, planning, malice aforethought. Also, these live streams, I hope they're valuable. If they are, would you please click the thumbs up button? Not for me, right? I probably make $100 a month on YouTube revenue, so I'm not, whoring myself out to get thumbs up so I can get rich. What I would like is that YouTube says, you know what, this is quality content. It's actually helpful. It's not a get rich quick channel. It's not a go, 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 rah, rah, rah channel. This is about solid knowledge. And it'd be great if YouTube said, you know what, this is what we would like to promote. But whatever. So that'd be great if you'd click the thumbs up button. Also, if these are helpful, guess what? There's no cost in the terms of finance, right? You don't have to pay money to be here today. But there is an obligation, and that is to visit tradersway.com, open up a demo account. It's not a big deal. It won't take you very long. Maybe 30 seconds. Then you'll find yourself in the back office, and you're like, hey, it's all clean and organized here. This is pretty cool. Then you download MT4 or MT5, whatever you want. If you want C-Trade or something else, great. Those are options too. But the thing is, you'll start placing trades on your demo account, and you'll say, hey, the execution is fast, no doubt. Right? You'll say, oh my God, the spreads are pretty good. I mean, the spreads are very competitive. But the thing is, the swaps are also huge. Nice. All those things are really good. So anyways, tradersway.com. Let's see if they can earn your loyalty and respect. It's a challenge. Try them out. See if they can earn your loyalty and respect. And if so, what you'll find is they'll earn your trust. And then you'll find that it's a symbiotic relationship. If you succeed, they'll succeed. Okay? Molly says, hey, what about Africa? Why don't you contact them? Yeah, reach out. Don't be afraid. Okay, so cool. So here we is. And what we're looking for here, if you're enthusiastic about the future of global macroeconomics, you'd say to yourself, oh, some dollar weakness and some yen weakness. Okay? Now, on Friday, we had non-farm payrolls. It came out pretty good. It was all right. And we got dollar weakness. Very cool. Now, in my humble opinion, I read a few things. I'm not going to name the sites because I don't have good things to say. But I read a few things, and the media that I read, the media article said, oh, see what happened at non-farm payrolls? That means the Fed's going to raise interest rates sooner than anticipated. I'm like, what? Dude, were you even there? So once again, be very, very, very cautious of where you get your information. And I'd much rather you just get your information yourself and never listen to anyone, including me. I want you to be a completely independent currency trader based on you're making decisions based on your own information. So in the last 2 weeks, I've done research on the Bank of Canada, the Bank of England, the Reserve Bank of New Zealand, the Federal Reserve, the ECB. I think that's it. Yeah, so at least that. Been on their websites, spent hours reading, watching recordings, all that kind of stuff. Did I do RBA? Oh, yeah. And of course, RBA, that's right. For sure, I spent at least a couple hours on the RBA. Okay. No, I didn't do OPEC, but I pay attention to OPEC, but I didn't like study their reports and all that kind of stuff. But I'm paying attention, but whatever. So to me, like, dude, that's just me doing my job. And in fact, I love it, right? So like this RBA one, I sat outside. It was freezing cold. I was under the heater and smoking a beautiful cigar. It was at night. I switched over to Zinfandel for something new. And I think I'm going back. I'm going back to Grenache, guys. Going back to Grenache. But, or Carmenere. Ooh, I should probably do that for a while. Carmenere. That'd be a good switch from Zin. But anyway, so I got my Zin, my old vine Zin, and I got a cigar going. It's at night, and I'm on the RBA website doing my research. My wife's coming, and she came outside to the deck, and she's like, what the hell are you doing out here? It's freezing. It's pitch black. Well, that's what I was doing. Okay, doing my job. So anyways, the point here is, I used to get the Wall Street Journal. I used to get Investor Business Daily. I used to get the Financial Times. I used to get Those are the main newspapers. I think those are that was it for major newspapers. I don't read any of them. Haven't for years, because the more I started doing my own research, the more I would find things that I totally disagreed with. You know? I'm like, whoa, I was at that meeting. I watched it live. That's not what he said. And that came up more and more often. So once again, over the weekend, I read, oh, well, if you look at what happened at non-farm payrolls, that means the Fed's going to raise interest rates sooner than later. I'm like, dude, that's not how I read that. So anyways, dollars down, and that's what I thought would happen. That's what I wanted was happen. I waited for weeks for this. Great. And now maybe we got something going on. Okay? Now, how many people can confirm the one thing I wanted to buy was Kiwi over the last 2 or 3 trading sessions? I spent a lot of time talking about New Zealand. In fact, in my day trading group, we spent one entire meeting just doing research on how the RBNZ felt about the current state of their economy. So I didn't say this one, 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 I didn't say this one. I said, this is the one I want. After days of research. Like I said, in the day trading group, we got together and I'm like, you know what? No lecture today. I don't want to go through the charts and do technicals. You should already know all that. We do it multiple times a day. And I said, on this particular session, we're going to spend the entire session doing research on the New Zealand dollar and the Reserve Bank of New Zealand. Primary research, not what some journalist major at the Wall Street Journal thought. Nailed it. Cool. Okay. Again, I wouldn't say that that's a sign of greatness. That's a sign of work ethic. Okay? Cool. That's it. It's just the job. So, lecture over. All right. So, great. Yeah. Yeah, great. Okay. All right. Fine. Now what? Yeah. Let us just move over to the calendar first. Let's start there, okay? Whoa, 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 whoa. Calendar. La da 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 la 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 la. All right. Okay, what's going on in the world? Mutual Fund Monday. Everybody wants to talk about what's recently happened. So the Fed just made an announcement. Hey, we started the taper. And now, a few days has gone by, and now they all want to have their speeches to clarify. Okay? Okay, Clarida, Powell, Williams, Bowman, these are big dogs. Okay? So anyways, they got something to say. They're trying to be transparent, and and by the way, multiple heads of central banks have flat out said the market is priced in interest rate hikes, and they're wrong. So these guys are coming out here trying to set this record straight. The interesting thing is many market participants have painted themselves in a corner, and they won't listen to the reality. They're going to trade their thesis, but they're not going to trade reality. So these guys are going to come out and very little will change, even though they're trying to change market sentiment. Okay, or align market sentiment with reality. Cool. New housing prices out of Australia. Well, that's important. They're going to be high. they're going to be going up. Great, but that's just a consequence of the situation. The RBA said, yeah, it's a concern, but the banks are well capitalized. One of the things like New Zealand and Australia both have talked about recently is high home sales prices, but they're talking about LVRs and DSRs, and that everything seems to be in check so far. And so, yeah, there's a risk of this being overheated, but not a big risk yet. Okay? So what does this mean? This is two sides of the same equation, the same coin. Okay? How much you can borrow against the value of an asset, called loan to value ratio. Okay? So if you want to borrow $800,000, the house better be worth $1 million. So you might get a deal signed with the seller, then it gets appraised by the bank, and the appraisal comes back $950, and you're like, no, we can't lend you $800. We can lend you $750. And you're like, $750, but then I got to come up with the other $50, and I don't have the other $50. Then you can't buy the house because the loan to value ratio doesn't make sense. So that's that size. What's the asset worth now versus what you're going to borrow? The next one is, if this is okay, do you have the income to support the debt? Debt to service ratio. Can you afford the monthly cost? This is the asset worth it? And then can you actually afford it? Okay. And so the RBA and the RBNZ said, yeah, look, we get it. We understand. We fully are focused on this aspect. Totally. But we got it under control. And the banks have it under control. Good. So not a surprise to those countries. Okay. Let's see. PPI. Okay. Everyone's hypersensitive to PPI. Well, to all inflation. So this will impact profitability of U.S. corporations. So, iPhones haven't gone up in cost, but it'll cost more for Apple to produce the iPhones, ship the iPhones to the United States, ship them to their stores, and then sell them to you. And so will Apple only be 80% profitable versus 90% profitable? Like their profit margins are so huge. But what about other situations where the profit margins are 10%, but prices have gone up, a lot. Now they might only have 3% profit margins, and okay. So it'll impact some businesses more than others. So we'll pay attention. Is it out of control? Is it transitory? It's all the same nonsense. What the market really cares about is CPI, and what the Fed really cares about is PCE. But this is sort of a heads up. It's a precursor. It's the canary in the coal mine. Okay. Cool. So again, we're really looking at profit margins of the producers and paying attention to this side. Anyways, inflation out of China. Well, this is important because we're worried about a slowdown in the Chinese economy. Are they handling COVID, and why are they putting curbs on steel production and all this kind of stuff, right? So we'll see. If the economy is slowing down, they're not going to have inflation. So that could be a very interesting heads up as well. Big one, especially if you're trading Australia and New Zealand. Wednesday. Yeah, boy. Check this out. Wednesday is all about CPI in the United States of America. Okay. Very cool. Okay. So that's the headline. That's going to catch everyone's attention, but the Fed doesn't even look at it. So I don't know why the market pays so much attention to it. They love it. Right? So 4% inflation, wage growth of what? 1%? Okay. And here we go. Aussie jobs report. That's a great one. That's Wednesday night / Thursday morning, depending on where you are. Okay. Is that a negative number? Wow. Come on now. Thursday, UK GDP, industrial production, manufacturing production, right? You can break this into industrial production, capacity utilization, that kind of stuff is showing you are factories being used, and if so, how much of the factory is being used, right? So you want to look at that. Productivity is a good thing. You want productivity. So you want good industrial production. You want good manufacturing production. You want good GDP production, Okay. So all of that is pretty good. Although when you're looking at GDP, it's backwards looking. But I don't know, so what's going on in the world of the UK right now? The Great British Pound is tanked because some market participants thought that the Bank of England would raise rates. BOE, percentage, interest rates up. But that didn't happen, so this was overpriced. So it came down hard. It's still coming down hard. But the thing is, when you look at GDP, you want to break it down: consumption plus investment plus government spending. And I think you should kind of look at these and kind of don't get all caught up like the pound is weak. It'll always be weak. There's something going on wrong. Well, what's going on is market participants were betting on something that didn't happen. So the pound is coming down, not necessarily because people are selling it, but more necessarily people bought it for the wrong reason, pushed the value up, and then found out they're wrong. So they're losing money. So as a currency trader, you might be short-term short. You've picked up 2 or 3 really good trading days to the downside. But to me, I think it's bigger money was wrong, and the money you're making is coming from their pockets. But this is the normalization. Okay, so this is price discovery. Oops. Okay, bets. People bet and they were wrong, and now they're getting punished, which is normal. They should. They bet. Okay. Bank of England laughed when Bloomberg challenged them, right, about this. Like, why did you signal that you were going to raise interest rates and you hurt all the poor market participants? And they laughed. They're like, dude, we never said that. You said that, okay? So anyways, going back to this, you could break this down like what's going on here. You could look at CPI. You could look at retail sales and say, so how's the UK doing? Okay, this is business investment and also housing. So you can go housing over here. You can maybe do some CapEx over here. And then, of course, is the UK government spending more than their normal budget? And is the actual budget this year greater than last year? And if so, what you're looking for is G is probably going up. Okay, CapEx and is probably down, but housing's probably up. And then you want to look at consumption. How's CPI? How's retail sales? Is retail sales normalizing? And we already know there's inflation. Okay. If consumption was down, you'd have deflation. So there's a lot of hints going on where you can say, well, I see the Great British Pound tanking, but I think big dogs took big bets and now they're getting neutered. They're getting put down. So now you're trying to decide, well, what's the real value? When we get a certain price, okay, when you get to a certain price, you'll uncover value if you buy it. Remember, I defined that. If you came to my non-farm payrolls presentation on Friday, which was, 3 hours? One of the things we talked about is cheap versus value. Okay, so you might be able to uncover some value as a price comes down relative to what this actually says it should be worth. You see? Huh? Now you're the big dog. Okay, and that be it. Really? Nothing's going on Friday, huh? Let me change this from, well, I guess so. Let's throw in a low. Let's go back to Friday. Really? Nothing going on Friday? Jolts, interesting. Do you guys follow Jolts at all? I remember a lecture in one of my econ classes. I think it was my macroeconomics class. We spent a lecture on Jolts, which was not a whole lecture, but it was an interesting sort of philosophical discussion about, reading or managing an economy. What would you do? So like my macroeconomics professor at Harvard, he wasn't a full-time professor. He was an adjunct, I think you call it. But anyways, he worked at the Boston Fed, and he'd just drive over to Cambridge, right, in the evening and do the class. And so he was talking about a lot of the things we're talking about, whether it was a model or how the Fed uses the JOLTS reports and NFP. But we'd have these discussions like, as a regulator, as an overseer of the economy, how would you use JOLTS? And not just what is JOLTS, but what is JOLTS saying now versus what it would have said 10, 15, 20 years ago. When you put it into context, what does it mean, and what role should the government have, and specifically what role should the central bank have? And what great, amazing stuff, right? So like a lot of people will say, Harvard's overrated. Why would you go there? You're just a snob. I'm like, I'm an elitist. I'm not a snob. And the second thing is, like, when you have conversations with someone that is actually looking at this information and then goes to work the next day to use it to make decisions to run the economy, I'm like, thank you, Harvard. Right? Not some professor that, read a book 30 years ago, got his PhD, and is still teaching the same stuff 30 years later. But literally the guy that looks at this information, makes a decision, and applies it to the real world that next day. Amazing, right? Oh, is it Friday? Friday's Thursday. But is Friday an off day, or is it Thursday? I don't know, guys. I'm an entrepreneur. I'm not good with holidays. Like, I don't know. Okay. Pat said, instead of Purdue, Boilermakers. That's a good school, though, right? I know someone that went to Purdue. A Turkish friend of mine got a job in the Silicon Valley for a couple of years, and then was accepted at Purdue to do his MBA. And he had nothing but good things to say. Okay. So anyways, look, a good week, but nothing really to get in our face. So maybe a free and clear week? Oh, wouldn't that be nice? Okay. Okay. Jolt was all twice the sugar and all the caffeine. That was the brand, the motto. And by the way, how many people here are not familiar with the JOLTS report? You mean, right? So if you don't know, if you're not familiar with something I'm talking about, you should ask. You should point that out. Don't be afraid, right? This is an open mic. This is open mic night. Live Q&A. You're talking with someone with a lot of experience. This is for a conversation. I'm not just throwing in, trade alerts, and, I'm here to have an open discussion with you, right? So don't feel like, some people know a whole lot and you don't know much, so you shouldn't ask a question. No. This is what we're here for. If you want detailed, deep dive stuff, you should join FX Bootcamp. Okay. JOLTS is sort of the opposite of non-farm payrolls. So let's say non-farm payrolls tracks jobs. Okay? Jobs taken or lost. Okay? So you can look at it from the employee point of view. Okay? That's how I look at it. Did an employee get a job or lose a job? That's how I look at it. It's not actually quite that way. There's an establishment survey and all that kind of stuff. But this is how I look at it, right? Right? Now, the next one is JOLTS. And that is, right, job ads. And if you're in the UK, advertisements, not advertisements, right? It's job advertisements, right? And so this is sort of the corporate point of view. It's not jobs taken or lost. It's corporations placing job ads. It's the help wanted. So like if you're asking yourself, well, is non-farm payrolls going to be good next month? Well, if corporations aren't even advertising, if they're not even trying to find employees, what's the likelihood you're going to have a good non-farm payrolls if corporations are not even looking to hire people? Okay? Now, the philosophical side that I was talking about had to do with this. Okay? There's two parts that the Fed looks at. And so you have a chart like this, and there's data plotted. And let's say all these represent sort of the type of jobs that people are looking at. I forget what it is, but it's people looking for jobs somehow. And then up here are the jobs that are available. Okay? And right now there's very little overlap. So, for example, very few coal miners are becoming artificial intelligence programmers. And so typically there's a lot of overlap. It would look like this, right? The blue and the pink, and it's think of it as a community, literally community of people, like a market, and people that need jobs show up to the market like, do you have a job for me? Can I work for you? Okay. Meanwhile, there's also employers that are like, hey, we're looking for an AI programmer. We're also looking for some HR people. Oh, you're in marketing. Well, I have a couple of project managers that need, marketing. What kind of marketing do you do? Right? That kind of stuff. And now you're talking with people that are trying to hire, right? And you might be looking to get hired. But what we were talking about in regards to the Fed is starting to see where they don't really meet. So there's a lot of this, but there's only that. And the thing is, these people can't do those jobs. Oh, you used to be a coal miner? Well, why don't you work with us? We do artificial intelligence. Like, it's just not going to happen, right? And so now you got to do some training. Okay. So if you look at the factors of production, for example, okay, in this case, what you're going to look at is labor, right, times capital. Okay. And what needs to happen is, we'll do this in blue. You need to take labor to the alpha. And part of it is, before that happened, what happened was the world changed. Okay? The world changed. And the United States is a very productive country, and we want to be more and more and more productive. And so as we moved away from coal into, let's say, alternative sources of energy, we needed less and less coal miners. But at first, that wasn't the change. The change was to capital. Suddenly you're driving a Tesla, and you got solar panels on your roof, or like my wife's BMW gets something like 40 miles to the gallon for an SUV, 40 miles. My Porsche gets 11. I just checked it the other day and I laughed. I get 11 miles to the gallon, but I go fast, right? But my wife's gets 40. So she's got better capital. She's got capital to the alpha, but at some point, think about the technicians that work at the BMW dealership or at the Porsche dealership. The older cars, you're like, oh, I'll work on the carburetor myself. And you needed what? You needed a screwdriver and you could fix anything on a car. Now you need a PhD, right? So now the cars got smarter. So now you need labor to the alpha, okay, to have your factors of production, right? Those are the simple factors of production. Now you can throw in entrepreneurialism and a bunch of other things, but those are the basic things you'd probably learn in like high school economics, right? Right. So anyway, so now that you need labor to the alpha, there's a lot of people in the workforce that just don't have the alpha. Okay. Another interesting thing that I read, and you guys might find this shocking. I found it shocking. I forget the number, but I think it was like 2. I'm gonna put it as a 2. I think it was 2. 2 million women. Woman. Okay, lost their jobs because of COVID. Okay. Now, these are your daughters, your wives, your sisters, your cousins, your moms, right? And men are inherently lazy. So men kind of pretend they work all day and then they watch football and drink beer. Women work and then they take care of the kids and then they take care of the house and then they take care of the elders, right? Here's the interesting thing though. 2 million in the United States lost their jobs. 18 months later, 200,000 went back to work. Oh my God. Yeah, that's pretty bad. That's pretty bad. That just doesn't seem right. Just doesn't seem right. So something needs to be done about that. That's going to be a real problem, I reckon. I think that could have profound effects on the culture, not the economy, on the culture over time. Okay. Hope says, yeah, actually we quit. I got you. All right. So anyways, that needs to be fixed. Okay. That needs to be fixed big time. Okay. So aren't we trying to work toward income equality, and stuff like that? But if you're not, you're not going to have income equality if you're not working. So and economics won't describe why that's happening, but that's where the government's supposed to step in and say, well, that's a problem and we need to figure out why. Okay. And then we need to somehow support women to get jobs, to get good paying jobs, to get equally paid jobs, to get jobs that have, growth and a ladder without a glass ceiling on it, right? Like that's when the government needs to step in. But that to me is a big red flag. That's not good for economics or for society. Okay, so let's take a look, right? Let's take a look. Oh, by the way, just so you see all this, I have all these set on a 15-minute chart. Typically, I have them set on an hourly chart, so they're a little more sensitive, okay? They're a little more sensitive than usual. You're like, oh my God, the yen just popped. Well, just bear in mind I changed the time frame. I'll probably change them back, but I just want to point that out. So let's go through the charts. Okay. 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 So I want all this to go up, but almost all of it, I think pretty much all of it except for Kiwi, looked very, very hopeful, made a lot of sense, but I said it was too early. Where even just 8 hours ago, I said this was likely to go up. But what it says, what the chart says, if you're going to be technical, it says up and then down. Even, right? And I'm a bull and I'm like, I get all of this. I got it all marked out. I get it. But if you're going to use statistics as a way to measure opportunity and risk, the up is just not quite enough. But here's the interesting thing. Like, let me drop into a 15-minute chart. Okay, one of the things I talked about in the Asian session last night when we were here, I said, this is what I think it's going to do. Okay, right here. And then it's a giant, I don't know after that. So you can only do it if it's a day trade. But this is an epic opportunity for a swing trade, but you have to understand on the higher time frame, it's still solidly down. So you're buying a lower low in a downtrend. That's never a good idea. But I understand too, this was meaningful because of price. But this was the response to non-farm payrolls on Friday. Okay? And that's good also if you're a bull. So you have the right price and this right price action. I said the only way you can do it is to buy the higher low, right, off the monthly pivot in the daily. And maybe you can get it here, but you could probably find better trades. But that's all you could really hope for now. Now you might say, well, but I got a longer term point of view. That's cool, but look at that dang chart. What that chart says is this. Okay? So until you get evidence, I don't want theory, I don't want your guess. I don't want your bet. Like, I bet you this is going to go up. Like I said, why don't you analyze C plus I plus G and try to come up with a good, true valuation if this big decline is simply market participants betting on a rate hike because they got all of this wrong? Then what is it worth? I'd rather you be doing that now and then throwing together some market conditions that are favorable instead of betting and guessing. Okay, that's all. So you had a day trade, but the swing and position were, the position was an inside month, right? S1R1. Weekly was okay, but I don't want to be I don't want to be swinging long in a bearish market ever. You get it, right? So that's that. Euro looked better to me last night, and it still looks better to me, but I'm treating it as a giant sideways thing, right? So we got this, we got that, we got that, and we got that. So again, in the day trading group, when we met last night, so we meet Sundays at 8 p.m., by the way. Okay. So the only thing we really had was this. That's all. That's it. Okay. So 1550 up. And if we're down here below 15, we're done. Out. Goodbye. Smell you later, dog. Okay. That's it. Like it ain't working. It ain't not working. And, we're caught up on a 1 hour, 200 EMA, but we got a 2155 kiss. Okay. So, it's setting up. So, it's setting up. It might be all right, but just don't be shocked. I'm not ready to declare victory, right? Standing on the deck of the aircraft carrier. Okay, we haven't got above that. We haven't got above that. To me, it's just doing the job, right? You show up, you take it. You're like, do I have enough support to call that support? Like, you can buy it at support, or you can buy higher lows. Well, it's definitely not a higher low. This is kind of, and on a smaller time frame because this is non-farm payrolls driving it up. So you're like, ooh, a higher high. Cool, higher low, but only on that really small time frame. So I could see this it could still do that. There's still bears there. Okay, I hope not, but the thing is, it's still there. It's still real. It could really be there. So the one trade I was interested in last night for sure is that trade. Oh, it worked out. Now this one, I threw it down here. I don't remember why. The psych level or something. I didn't catch it here, but I caught it on my other account. Definitely for sure. And so far so good. Okay. Well, we got up here, and so I would assume, I would surmise that there would be some sort of pullback, and that I will be a buyer on retracements, because I would call this, even though it's a top, I'm going to pretend it's swinging because of my bias. So I'm going to treat this like a higher high above this. Therefore, I am going to look for a higher low. So in a similar fashion, I have this marked out with Fibonacci. You could do it this way, and you could say, I don't know, somewhere in here is my sweet spot. Okay? You would say somewhere in here, I'm a buyer. That's good enough. Let's say you don't like Fibonacci. You're like, well, here's the 21 EMA, and that's where it is now. But in the future, maybe I'll catch it around here, right, as it goes up. So you'd have this. Either way, it's the same idea. So, right, so I'm in sort of here somewhere, and I don't have an uptrend yet, but I have permission to try to make it an uptrend. I can't buy it here because that's high. I cannot buy high. But I can buy low, so, I don't know, just like something like that. How about 71.50? Yeah, okay, fine. And so we'll see throughout the day whether I can get my pullback. Because as a trend trader, I buy higher lows. As a bullish trend trader. So I'm at the top. Now I just have to wait the rest of the day. And between now and tomorrow, I'm going to try to buy a higher low. And it's a little dangerous because we never made it above that high. Remember, there's resistance right here. But I'm going to play it like it will and drive it north. I'm going to participate on that one. Okay? And one of the reasons why is it seems like the other currencies are going to try too. So I have what we call congruency. Cool. Nice. Let's take a look at Aussie Dog. Aussie Dog. Okay? So I have 3 plans outlined in the day trading group. So that one's working. And sweet. Right? That was supposed to be pink. Come on. Okay? Cool. So we got the first one. The other ones are setting up. So cool. Okay, what's the downside risk? Remember? By the way, I listened to an interview by of a very, very successful investor. He's in all kinds of investments. It was an interesting conversation, but one of the things he talked about was the importance of a liberal arts school. Okay? And I used to be, like, I never really knew what a liberal arts school, but I thought it was for a bunch of hippies. Turns out Harvard's a liberal arts school. I didn't even know. I just wanted to go to Harvard. So anyways, I'm like, what? Wait, what? It's a hippie school? I didn't know. Anyways, he said the thing with a liberal arts school, because when you go to Harvard, you don't even really have a true major. You just go to Harvard College, right? When you're 20, they're like, dude, don't tell us what you want to do. You don't know anything. You're 19 years old. You don't know anything. So you go through Harvard and they give you an education. They groom you to be a leader. And then when you're done and you have a bachelor's degree from Harvard College, then you declare what you think you're good at. And then you go to grad school, Harvard Law School, Harvard Engineering School, Harvard Medical School, Harvard Business School. Okay. So anyways, he said that the best investors, best traders go to liberal arts school. And he said the reason for it is they're taught to argue, critically think, which is another way of saying argue, both sides of the equation. So when you look at this as a bull, and I'm a bull, and you know that, and I have it clearly outlined, but he said the importance of a true critical thinking education is that you understand the other side. You understand the other side. You don't just regurgitate the one thing that you're certain of, That's too easy. But you have to critically think about the other side of the trade. That's what he said. Okay? I thought it was interesting. I'm like, oh, I get that. Okay? Compare and contrast. So it's important. You want to look at this and say, when will you know you're wrong? Well, this is a key moment in time to prove that you're wrong. So if this does this, we're heading down there. If it doesn't do that, then that's important because on some level, maybe not completely, but on some level, it validates your hypotheses that this is going to go up because it didn't go down where the people that would sell it should sell. Okay? It was your impression that the Bank of England and the ECB were almost the same thing? Well, then your impression was wrong. That's why it would be different. Yeah. So let's just start from there. You're probably wrong. Okay. So we cover that a lot in the swing trading group. We cover that a lot in the day trading group. How to know when you're wrong before you lose a ton of money. It's all about validating your hypotheses. So here's what trading is. You have a hypothesis. So a lot of people thought the Bank of England was going to raise interest rates. So what did they do? They bought pound with the understanding that it would go up. That was their hypothesis was this, which influenced their investment philosophy. It created a bias. Technical analysis is simply confirmation or rejection of your hypotheses based on statistical analysis of price over time. And you'll see, as soon as the Bank of England said, no, we're not going to raise interest rates, these guys thought they were wrong. So what did they do? They cashed out. They got out. They're like, oh my God, we were wrong. Their hypothesis was denied. And they were smart enough to get out. Now, some of them may have lost money. Most of them probably didn't lose money because they bought it and went up a couple of hundred pips. As soon as they realized their hypothesis was wrong, they got out. Now, they're not trading because of the red candles. They got out, which created the red candles. And now some retail traders can trade along with that and make some money. But it's sort of like they had a real hypothesis. They really traded it. Then the fundamentals and the technicals both confirmed that, well, the pound was overvalued. The valuation increase had to do with the assumption, hypothesis, of the Bank of England raising interest rates. And as soon as it was clear that they weren't, correction. Price discovery is what we call it. Then what is it worth if they're not going to raise interest rates? Okay? So I want you to think about that. So therefore, what we do is to have a hypothesis, but also understand how and when and where and why you would be wrong. You need to know that too. Why would you be wrong? So I look at like this trade and I think down. Why? Well, I think that's going to go down in value. And then I think this is going to go up. Why? Okay, well, if the United States is doing well, they're going to send a lot of money to Canada to do business with Canadian services, like maybe manufacturing, to buy natural resources like gold, oil, diamonds, nickel, wheat, beef, so on and so forth. Canada sells a lot of natural resources and more, right? It goes this way. So if the United States is doing well, they're going to send money to Canada, which means they're selling dollars to buy Canadian dollars. That's just one sort of basic thing. So if the United States is doing well, that would weaken the dollar, the US dollar. If commodity prices are going up, that would be good for Canada. If business activity is going up, that would be good for Canada. Okay? So I think that, and that's a lot of my thinking. So now that doesn't get me into a trade, that sets up my bias. So I say, okay, if I want to sell this, let's do some statistical analysis of the price over time. And I'd say, okay, well, this is a price in which bears should exit. And this is a price in which bears might sell. Two totally different reasons, but it turns out it's the same price. That's why a bull should exit, because that's where a bear would sell. Oh, well, that makes sense. And so from here, I say, well, on a daily analysis, I think you should sell it there and target here. And then probably somewhere here, you'll sell there and target here. And then probably somewhere around here, you'll sell there and target here. And now we will be at an interesting bullish level again, where we started. So I should probably have some level of caution. I don't know what's going to happen there, but I need to be cautious about something going against me. So now, from just looking at this chart, I start with a hypothesis. Okay? Check this out. If we're up here, my hypothesis is denied and there's nothing for me to do until we get to 125.56. Why 125.56? Statistical analysis of price over time tells me that's the next spot for multiple reasons. But none of that is fundamental. That's statistical. So all of this matters. Okay, cool. You guys ready for gold, oil, and Bitcoin? Okay, I'm looking for up on oil. Oh, cool. So we're just back above here. And the next one would be there. So I'm kind of looking for this or this. Okay. Okay. Gold still going up. I love it. Thank you, gold. Okay. Love it. Thank you, gold. Okay. Check this out. This price projects 118.32. Now, I've already done this for you guys, but it's good to re-highlight it. Okay. Okay. So last week, or was it last month? I guess last month, this projected 118.50. We didn't get there, but this is telling us we're still climbing. So we could still basically get there. So you could combine this with that and kind of get it in there. So basically 1750 to 1850. Okay. And it's a 2-month run, which is not a big deal. Okay. Okay. Cool. So that's good. Probably if I were to guess, is this December? You know, maybe we're on our way to 19. I think 2000 is too much, but it really depends on what November does. Okay. And then, of course, Bitcoin. Bitcoin's way up. My Cardano's not way up. My Shiba's not way up. There's about 3 or 4 other little coins. None of those are up. But Bitcoin's up and Ethereum is up. So looking at Bitcoin, let's see. Do traders use pivot points when trading Bitcoin? Well, what a coincidence that is. Okay. What because this was set last week. So I don't know. That's a 5-minute chart. Look at the accuracy. We didn't spend 1 minute above. Yeah. Yeah. Yeah, Solana took over though, right? Oh, I bet on the wrong one. Oh. So anyways, I think I'm going to call it a day. I was up at 4 o'clock in the morning, so I'm shot. It's now 9:13 in the morning and I'm exhausted. So I think we'll call it a day. Thank you for being part of this community. Remember, visit tradersway.com to get yourself a trustworthy broker that actually executes your trades in the interbanking system. Please visit fxbootcamp.com if you want to learn how to trade or join a live group and be shown how to trade. All of that is available to you. There's books, there's free videos. All those links are in the description below. But life is good and being a currency trader is great. So don't miss the boat, yo. Let's go. Your destiny is awaiting. Peace on earth. May the pips be with you. May our profits be above average. I'll see you later. If you're in my live trading groups, I will see you at 3 p.m. tonight, and then I'll see you at 8 p.m. tonight. Okay? But I thought maybe we should combine those two meetings coming up. So let's have a discussion over the next few days of combining the 3 p.m. and the 8 p.m. I think we could get them into one meeting. So you spend at least, 1 hour less in front of your charts? I think, right? Especially if we're going to try to do something in the spring. So let's talk about that. Let's talk about it. I got some ideas. I got some theories. I think it's good. But remember, I'm simply a servant. So I need to know what you need. So peace on earth. May the pips be with you. May our profits be above average.